Hello, everybody, and to those rejoining on our webcast, you're all very welcome to this session. I'm delighted to talk to you about Guinness this afternoon. It's a brand that's very dear to my heart. It's part of my DNA as a Dubliner, but actually my father also had a pub right at the gates of the St. James's Gate Brewery in Dublin. I'm going to talk you through the progress that we've been making on Guinness, why we believe that the brand is one of the most attractive growth opportunities within beer, and how we are positioning Guinness to deliver a long runway of growth and further success. Starting first off with the market and with our performance. Guinness plays within the premium beer segment. It's a $135 billion market, I should say, and the fastest growing premium beer segment for the past 3 years. And within that, Guinness has significantly outperformed. We have delivered 13% NSV CAGR, well ahead of premium beer growth of 5%. GB grew 22% CAGR, whilst both Ireland and North America grew in high single digit. Across the board, we've delivered near universal share gains, strengthening our position within premium beer globally. And this growth is also extremely high quality growth. Guinness generates more than 60% of gross margin and delivers ROIC of 30%, which is roughly twice Diageo Group. Looking ahead, we're continuing to see very attractive fundamental growth for premium beer, with Guinness extremely well positioned to continue taking share within that segment. So why are we excited by the opportunity ahead? Well, today, our top 3 markets, GB, Ireland, and the US, represent 2/3 of NSV. But even in those core markets, we are significantly under-penetrated. 13% penetration in GB, only 5% in the US, and that compares to 24% in Ireland. So that shows there's considerable headroom for growth in terms of attracting both new consumers and increasing our penetration within their growing occasions. And these 3 markets will therefore continue to drive the majority of Guinness growth up to F30. However, although we're sold in over 150 countries around the world, outside of GB and Ireland, where we have those market-leading positions, we are very small in many of the premium beer markets in the world. And in many markets as well, we're actually not represented at all. For example, even in the US, Guinness is only number 12 within premium beer, so significant headroom for us to grow further within those markets. So to capture the global opportunity efficiently and effectively for Guinness, we operate 3 distinct route-to-market models, which I'm going to walk through in turn. And the benefit of this is these 3 models give us a lot of flexibility, because rather than a one-size-fits-all approach, we can select the structure that maximizes growth, maximizes profitability, capital efficiency, and speed to market in each geography. And this operating flexibility is a major competitive advantage for Guinness and an important enabler of our global expansion plans. So let's talk first about the direct-to-market model, which includes most of our large strategic markets like GB, Ireland, and the US. And here we directly control distribution, our customer relationships, and our commercial execution. And we will continue to invest behind those markets, particularly in expanding our route-to-market capabilities in both GB and North America, with increased sales resource to expand both outlet coverage and call frequency. In GB, growth will also be driven by continued growth of Guinness Draught, expansion of Guinness Zero, and further innovation, and that will also be the case in Ireland. In North America, further growth will come through adding around 150,000 new accounts, both on and off trade by F30. The second model is our third-party distribution, and this approach is particularly relevant for continental Europe, where we can leverage the reach and the local expertise of strategic partners. It provides broad geographic coverage and improves our ability to execute. In Europe, we are simplifying our partner network. working with fewer, stronger distributors, which is enabling us to improve our pricing, our customer service, and our commercial activation. Within Europe, France and Germany are particularly exciting opportunities given their scale of the large premium beer markets that they represent. And this model is already delivering results. We have achieved double-digit growth while significantly increasing distribution, including more than 25% growth in our on-trade presence. Going forward, we intend to continue to increase our outlet reach to 100,000 outlets by F31, strengthening our execution and building Guinness into a much larger premium beer player across Europe. And finally, our third model, where we operate via third parties through licensed local production with royalty payments. And this is particularly valuable where Guinness is underserved and where local partners offer faster and more cost-effective expansion. These trusted partners brew Guinness under license using Guinness foreign extract and adhering to our exacting quality standards. And the key advantage here is really scalability, because without requiring additional significant capex, we can leverage the partners' manufacturing capabilities and their extensive distribution networks. And while profit per hectolitre is obviously lower than in our direct-to-market model, the trade-off is significantly broader geographical reach and very attractive returns with very modest capital requirements. And importantly, this model is also proven. In Australia, since moving to our new partnership with Lion, we have seen strong double-digit growth and increased distribution. And in Nigeria, since our transition to our new brewing partnership, Guinness has significantly improved its financial performance, its return to profitability, its growing share and expanding distribution. And taken together, these examples really show how this licensing model can unlock growth efficiently whilst creating value for both Guinness and our partners. So when we bring those three operating models together, we're really creating a powerful platform for global growth in terms of both the breadth of the markets covered, but also the strength in existing markets. And our ambition is for Guinness to become a top 10 premium beer brand in the US and to further strengthen our position in key European markets. Now, beyond that, we obviously also see further exciting opportunities to expand in growing premium beer markets such as India and Brazil. Of course, that growth is only possible if we have the supply capacity. In recent years, we have expanded capacity to meet growing demand, and we will continue to do so in support of these bold growth ambitions. Between F26 and F29, Guinness production capacity will have increased by more than 50%. We opened the new Little Connell Brewery in April 2026, which added circa 25% more capacity for both Guinness Draught and for Guinness Zero. A second phase of Little Connell expansion is planned for F28, and that includes further focus on non-alc production capability. Beyond those already planned investments, we remain confident in our ability to be able to expand further in a modular way in line with those demand requirements. Between F26 and F30, we will invest just under $1 billion in capex. Around 670 million of that will be directed towards supply infrastructure, including the Little Connell brewery expansion, packaging capabilities, and additional zero processing capability. The remaining investment supports in-market equipment, such as taps and kegs for that beer to go through, as well as brand growth initiatives, such as investments in our brand homes and other strategic projects. Given Guinness's growth potential, its profitability, and its very high ROIC, we believe this is a highly attractive deployment of capital. Now, Guinness has also a strong track record of successful innovation, and our approach when it comes to innovation is very simple. We want to bring Guinness to more people, in more places, in more of their occasions. And Guinness Zero is a great example. The brand has already established strong momentum in core markets and is contributing materially to Guinness growth, especially in GB. This year, we added over 1,000 Guinness Zero outlets in Ireland. We've added 3,500 micro-draft points for Guinness Zero in GB, and North America still remains largely untapped. So as this production capacity increases, we're going to extend distribution across more outlets, more channels, and more markets. At the same time, our Future Serve programme has really expanded the way that consumers can enjoy the craft and ritual of the distinctive Guinness experience. Guinness NitroSurge brings the iconic Guinness Surge and Settle right into the hands of consumers, no matter where they are. It has achieved impressive penetration in Ireland. Already, almost 1 in 4 households have a Guinness NitroSurge. Microdraft is very interesting because it unlocks on-trade distribution for those outlets where a keg and draft traditional setup may not be practical or appropriate. And it helps those customers serve a perfect pint of Guinness to their customers. It has also been a big part of supporting the Guinness Zero rollout, as about a third of the volume from microdraft is actually Guinness Zero. So all of those innovations together really strengthen the Guinness brand, whilst increasing accessibility in more consumption occasions. But we're not going to stop there, and today I'm delighted to share the next stage of this journey with us. Building on other successful Guinness innovations, we're excited to introduce this, the next step in our Future Serve programme, Guinness NitroSurge Tap. It's going to launch in 2027, and it is built on the same ultrasonic technology as NitroSurge, but it takes the experience much further. The device attaches to a 4.75 litre Guinness keg, which really allows consumers to pour and serve perfectly fresh draft Guinness in their homes with their friends. Consumers will enjoy the complete iconic Surge and Settle ritual with this innovation. Initially, we're going to launch Guinness NitroSurge Tap in Great Britain, in Ireland, and the US. And in other markets, our priority remains extending distribution of Guinness Zero, extending distribution of NitroSurge, and extending, of course, microdraft. And this represents, really, I suppose, another example of how Guinness's innovation is staying true to everything that makes the Guinness brand and product so distinctive and magical for our consumers, but also continuing to drive incremental occasions as well. So, in summary, Guinness combines an attractive category position, it's got strong momentum, it's got substantial global headroom. We're going to service this through our flexible route to market model with disciplined investment and supported by a strong innovation pipeline. And this gives us confidence that Guinness can continue to deliver sustainable, profitable growth and create significant value over the years ahead.